going to help you do an analysis and make you figure out what's the best thing for you and your family. So the thing is that it's about the service, the value that we give,
Exactly.
right? And we have
Exactly.
to educate them on that. And it's like, okay, it's like, I know that you're really big into fitness, and we talk about personal training and those kinds of things. Listen, if you hire a coach, if you hire a trainer, you're gonna probably get to your goals much faster, right? Whether it's in business, whether it's life coach, whether it's a dietitian, whatever it is. So think of us as real estate professionals that are gonna guide you to get to your goal much faster.
Exactly. Exactly.
So
Yeah.
so if you say, hey, this is my experience, this is what's going on. I'm here to guide you and advise you. You're ultimately going to make the decision for you and your family. But what's most important to you? Like, do you want to buy a house quickly? How soon? And some people may be motivated. I just spoke to a family that was like, we need to get out of here because our lease is up, right? How fast? And then they have some credit issues.
Hmm.
So it's like, well, listen, you gotta pay these credit cards, and you gotta get to this thing, because the faster you get there, then we'll be able to see if we can improve you. But your credit needs work. But these people are highly motivated, and they say, Eric, that's paid. We paid already. All right, when you get the letter, send it over to me. Everybody
Right.
has a difference.
Hmm.
Somebody might be like, listen, I'm paying. Somebody might be like, listen, I live at home. I'm not paying mortgage or rent.
Hmm.
I'll buy something like
Hmm.
maybe,
Hmm.
right?
Maybe.
They may not be in a rush, so they're gonna maybe take what the time frame is. And this almost us. We have to almost be like psychologists in some way to understand the psyche of some of these people, so we can kind
Yeah.
of guide them.
Yeah.
But
True.
but it's everybody's different, right? Everybody's
That's true.
different, and that's why we have to
That's true.
ask questions and figure out
Exactly.
what is your goal,
Exactly.
Yeah.
so we can
Exactly.
get you there, right, at the
Exactly.
time frame that you want.
Right.
Exactly.
That's true.
And, and,
Focusing on like, and it's so I read a chapter of this book this morning called Atomic Habits.
we're going to get to that in a second because we
Yeah.
have a question,
Oh,
right?
okay.
So shout out to RM2 USA. Here's a question. We're gonna get to Atomic Habits, which I also read the first quarter, which is amazing. All right, how can I qualify for a property without a job offer? Okay, so let's talk about this because this is truly important. Let's say that you reach out to Cynthia or Darren and you say, I'm ready, I want to buy my house. Great. One of the first things they're going to do is they're going to connect you to a mortgage advisor, lender, so you can figure out, right, what is your purchasing power, right?
Yeah.
RN2 USA.
It's important.
Because we can't look for a house for you if we don't know what your budget is and if
Yeah.
you're going to qualify, because you're going to spend time, energy, and money. Listen, if you're looking at houses, you're spending gas, and right now, gas ain't cheap,
Yeah.
right? You're
It is
moving around,
not.
you're spending gas, you're taking away time from your family and whatnot, and,
Yeah.
and then you're gonna have to give a security deposit or earnest money deposit and pay for inspection. And in the end, we don't want your loan to not close, so you have to figure out what the bank is gonna approve you for, right?
Right.
Now, to go back to your question, here's how um, we approve people. We look at three things. We look at income, credit, and assets, right?
Mhm.
So your amount of loan that you're going to be able to get is going to be based on those three things, right? Which loan program and whatnot, right? The more money you make, the higher mortgage payment you'll be able to afford, the higher price point of a home. However, right? So you have to have income, right, to get an FHA loan or a conventional loan, which you'll be able to enter into the marketplace with a lower cost, meaning lower down payment and whatnot.
Right.
However, if you don't have a job, if you don't have income, there's what's called non-qualified mortgages.
QM.
These non-QM loans can be sold to Freddie Mac, Fannie Mae, right? The banks have to hold them as portfolio loans. But because there's no income to assess, to really truly assess your ability to repay, how do banks fund these kinds of loans? Well, guess what, RN? We need a bigger down payment. Your interest rate is going to be higher, right? We have a no income loans where you can put 25-30% down and maybe pay a 7.5-8% rate compared to a 6.5 rate where the rates are today. So if there's some programs that are not using the conventional income, you can do it, but now you have to mitigate that risk by putting a bigger down payment. You have to
Yeah.
have more cash,
Gotta have more capital.
right? So it's, hey, do you not have income because you don't report it as a self-employed borrower? Can we do a bank statement loan where we look at your deposits and see what income we have? Can you do a profit and loss loan with your accountant, your CPA, to see what is it that you're earning, right? If you're buying as an investment, can we do a DSCR loan where we're just using the income of the property to debt service itself? So there's a lot of different programs and products that we have, and that's why our job, RN, he got it. Awesome. Thank you. Hey, do me a favor, on if you could just double tap that screen, show some love, give us a like if we answered your question effectively and efficiently. So it's really about figuring out what your situation is, because there's dozens of programs that are out there, right?
Mm-hmm.
And there's lenders that are very specific in certain programs. Listen, I love working with first time home buyers. My value is educating people, right? Helping people that maybe are not ready now, that maybe they may need some help down the road. I nurture them, right? Listen, I work with all kinds of buyers, right? But I also am blessed that I have a plethora of loan products to be able to find the right mortgage solution for you, right? So
Right.
RN2 says you're starting a business. Okay, so I'm gonna leave you with this, and we're gonna go back to talk about atomic habits for a minute. So if you're starting a business, you got to think about this, RN. If you're starting a business, right, you have to have that business for at least a year if you're gonna do a non-QM mortgage where you can provide your bank statements or whatever, or you do like a P&L loan, right? If not, typically, if you're gonna do an FHA loan where you're gonna put 3.5% down, you're gonna need a 2-year average of your net income, RN, right? So it's not what you can go in that first year, you can make $150,000 gross, but if your taxable net income is only $30,000, a bank is going to approve you in the $30,000. So
Right.
as a business owner, that's amazing. It's amazing because, right, business owners is what make this country go round, right? Um, but and we have a lot of tax implications, but it's a double-edged sword, because if you don't pay the IRS, now you're not gonna be able to take advantage of these low down payment products because you
Right.
have to report it. So what you got to pick your poison. Are you
Yeah.
gonna are you gonna
Gotta pick your
Pick your
poison.
pick your
yeah.
poison? Are you gonna pay the IRS, right, and get a mortgage, or are you gonna say I'm not gonna pay the IRS, I'm just gonna save money and I'm gonna put a big down payment and have a higher interest rate? Know that, because that's gonna help you make decisions. A lot of times people come
Yeah.
to me and like, oh man, I wish I knew this, right? I wish I would have talked to my accountant so I don't have to have all these write-offs. You got to realize an accountant thinks they do his or her job by you paying less taxes or getting a bigger return. And we all want to pay less taxes and have a bigger
Yeah.
return.
Yeah.
Yeah, but that net income makes a difference.
It makes a difference. So that's what. So just keep that in mind. All right. All right.
DSCR baby.
Yeah. So we got 13. We got 11 people live. What's going on? So RN says pay taxes and qualify or suffer the opportunity loss. You know what? Yeah. All right. It's about pick your poison. Listen, I have buyers right now that don't report a lot of income.
Yeah.
They have a lot of gross revenue, but they pay less taxes. But guess what? They save that cash, and they say to me, Eric, you know what? I'd rather put this money down in equity in a house than pay the IRS.
Wow, that's what they pick.
And that is their poison.
That's their
That's their
poison.
point. So they say, you know what, Eric, instead of me reporting $100,000 a year to qualify for a $400,000 house in New Jersey, I'd rather save that and put down 20%, 25% on an equity. And yeah, my rate is a little higher, right? But I'm not paying the IRS all this money. That is their choice. Our job is to have a conversation with you to see what's best,
Right.
right? Now, if you still, depending on everybody's lifestyle, how about if you can't save up to 20, 25%? Then you know what? You might have to bite the bullet and report that income and buy with an FHA loan at 3.5% down. On a $400,000 property, 3.5% is $14,000. But versus 20%, which is $80,000. It's a big difference. And in today's economy, in today's market, how long does it take to save that?
Right.
Right? That's money's flying, like groceries and I'm pretty sure right now, everybody, I would say 90% of the people are probably overspending in Uber Eats, right? And right, right. So I tell people,
Right.
I tell people all the time, right? When they say, "Oh man, this is what," and I tell people, I make them laugh. I go, "Oh man, this house is about $200 more than what I wanted," and I go, "Yeah. Do you spend $200 a month on Uber Eats?" Right? Make a sacrifice. Say, hey, you know what? I want to have an asset that's going to appreciate in value, and you know what? I'm going to have to meal prep at home or cook at home. And listen, especially nowadays, guys. And I want you. And we're gonna get back to the book in a minute, but especially now, like House like it feels like home ownership is slipping our fingers because house prices continue to go up because of a lack of
Yeah.
demand. So get in the game now, be beneficiary and appreciation. The $500,000 house after a year is going to be worth 525. After 4 years is going to be worth close to $600,000. You have $100,000 in equity, as
Mhm.
opposed to if you're spending $2,000 a month in rent, right?
Yeah.
You're spending $24,000 a year. In 4 years, you're throwing away $100,000 instead of gaining $100,000.
Right.
That is why the average homeowner is 40 times wealthier than
And
the
renter.
average renter, right? So going back to Atomic Habit, because I this is an amazing book. So can you go back into your point with Atomic Habits?
No, I think we were talking about focusing on the client's goal, and things of that nature. And it just made me think. I just started the book. I'm excited to continue reading it. And the first chapter was, how to create small habits and how to,
Mhm.
like lock into those small habits, because those small habits is what makes the difference in your life. And the first chapter was just talking about how we are focused on our goals. Now, how like setting goals, just in general, setting goals is great,
Mhm.
but a winner has a goal to win and a loser has a goal to win.
Mm-hmm.
But the difference between the loser and the winner are their systems,
Other habits.
Mhm.
and are their habits, right? So the point I was like just correlated with buyers and sellers is just as realtors, what we have to do is, all right, now that we understand the goal, what would differentiate us as realtors and the value proposition is just our systems
Mm-hmm.
and the
Mhm.
strategy behind how we're gonna make this happen. Like, what small things are we doing, or are
Yeah.
we paying attention to the numbers and understanding the market on a different level, so that way, say for instance, for a buyer, for example, yeah, like I was saying earlier, the example of saying like, all right, cool, it's competitive here, but what systems do we have in place so that way, all right, I understand that your goal is this, I have a system in place that we can still accomplish that goal by just doing it this different way.
Mm-hmm.
Yeah,
Right.
I mean, and
Right.
and if I'm not just so hell bent on the goal, and I'm more focused on the
The
process and making
process.
sure the process is clean and
Yeah.
smooth and
Right.
straight for you, then we will get there,
Yeah.
right? But if I don't focus on those things, then we may not
Yeah.
get there.
Yeah.
You know what I
Right.
mean? So that was
Yeah.
the point I think I was
Yeah.
making with the atomic habits.
That's a
Well,
great book, right?
yeah.
And I'm part of a
What's the
coaching
name of the
Atomic Habits.
Atomic Habits?
Yeah,
Okay.
that was the first book that. So we're part of a book club. So I'm part of a coaching community, and it's not cheap, and we're part of a book club, and they recommend one book, that were the whole coaching community, and there's 1,000 people across the country in this coaching community that read and we talk about it and whatnot, right? Um, and we have to pick one book a month.
Mm,
And it's how I started that because it's the beginning of the year, and it's really about that. It's about building the foundation. It's becoming, transforming to be the person, right? That's going to help you be the winner or achieve those goals.
right.
And guys, I mean, the biggest thing is just like anything else, right? Like if you are going to, if you want to achieve something, you're going to listen to people that have done it time and time again,
Mhm.
Yeah.
right? Where if you're gonna go, if you want to get, if you want to become a better pickleball player, right? You're gonna go and work. You're gonna work with a pickleball champion or whatever, right? Coach.
Mhm.
It's just about that's what coaches do. Don't listen to your uncle that never has bought a house before,
Yeah.
right? That's just a hater,
Yeah.
right? That's gonna go and walk with you in a home and tear it apart,
Exactly.
right? Listen to somebody who has owned multiple homes and has built wealth because of it, right?
Yeah.
Listen to a realtor that has done it time and time again and has all these countless stories and all these
Right.
people that
With
that
different
can
people.
vouch,
Yeah.
right?
Yeah.
So listen to them. And I listen. Um, I want to work with everybody. I want to help everybody. However, I have no issue firing clients, right? If someone is not listening to the guidance that I have, right? My job is to, if you want me to help you, and you don't pay me, right? You don't pay me, right? Right. So part like there's a fee for the bank and processing the loan at closing. You never pay up front. So you're not paying me for say, but you're contracting me, so you will, so I can get you to that goal.
Exactly.
And if you don't allow me to do that, right, then I'm not doing my job. I'm gonna move somewhere else, so that somebody else is gonna help. That's gonna want my help, right? So you got to pick the right professionals, right? Not everybody's created equally.
Yeah.
Cool. So I wanted to talk to you about, because you saw the 2008 crash
You were there
for
for
that,
Mortgage
right?
crisis.
And I get these questions sometimes, right? So I get these questions. What's going on, guys? What's going on, Sylvia, Ida, Lady, Angie, Ali? How's it going, guys? Feel free to pop your questions in the chat.
Yeah.
Right, we're over here chatting it up, and we want to make sure that we're adding value. However, if you do have questions, we're
Yeah.
here for you.
Exactly.
So please pop it in. RN came in and popped the question. So please, you can you can ask a question in the chat, and you can even comment your income, your assets, your credit. And I have my old school analog calculator here
Analog.
that I can tell you think you qualify for, because it's just
Right.
math.
Yeah.
It's just math.
I mean, we did it as agents, like
Yeah.
when we were pre-qualifying at
Mhm.
the time.
Yeah. So yeah, and that's the thing. All right, let's say for example, Cynthia, somebody at a barbecue in the summertime just tells Darren or Cynthia, hey, I'm thinking about buying a house, and then you say, you use an analogy. Well, the best way to test it is get into the marketplace. So you got to talk to Eric, right? It's no obligation consultation. In a few short minutes, you'll be able to tell you what your purchasing power is, and then you decide if you want to move forward or not.
Exactly.
And that's what I do in a few short minutes. And even here on this live, I tell you what I think you qualify for just by asking you questions about your income, credit, and assets, right? And then after 10 minutes, and I've done that with you, Darren. I've called you after, and I kind of send you a little voice note, and I say, hey, I spoke to this person. I think they can afford this, or they got to work on credit, or they're gonna need some kind of assistance, right? So we know exactly how to help you.
Yeah.
Exactly. That's important. That's why we are partners.
Yeah.
You know what I'm saying?
Yeah.
We're partners because I need to know how much of a house you can afford. You know what I'm saying? When I start looking.
Not only what you can afford, what you want to afford.
Wait, what?
Because listen, you might be able to afford $1 million house, but you may not want to pay that $1 million mortgage.
Yeah, that's true too. And then obviously we're going to ask a question about what you feel comfortable about paying each month.
Yeah.
Right. So I mean, but still preliminarily, I need to know.
You need to know
at least how much of a house.
Yeah.
Right.
I'll be the first to say that I'm not an expert in every single field of like the real estate transaction. Like you need. It's a team. It's a team-oriented thing. Eric is the finance guy. If there's any questions finance related, Eric is the go-to guy. Eric is not the attorney person. He's not necessarily analyzing the contracts. So we have our attorney.
Right.
Yeah, I mean we know about homes, but we're not home inspectors. We're not we don't have that keen eye like a home inspector. So we have that team, you know what I mean? Like so.
And they're doing the home inspectors getting trained on the up to date. Like they're the ones doing the reps when it comes to assessing the condition of a home.
Yeah.
Right. So this transaction, which can be the most important transaction up to this point in your life, there's a lot of people involved in it.
Yeah.
And
let me just interject there because again, like I tell my students, there are a lot of moving parts in the real estate business, in the real estate transaction. You know what I'm saying? Because once you've secured the home, you know what I'm saying, we're working with the buyer's agent, the seller's agent. We got the attorney, we got the lender. Let's not forget the lender. Okay, we got the lender, we got the buyer's attorney, we got the seller's attorney, we got the home inspector, we got the appraiser. There's a lot. Everybody has a part to play.
Title agents.
Everybody has a part to play to get you to the closing. To get you to the keys. Like, now you're home.
Hey, Cynthia. Hey, you know what? All right. Do you have a contractor that I can get to? Or hey, this possible mold. Can you get me a mold remediation specialist? The realtor is the we were just talking about this offline earlier. The realtor is the point guard
Point guard.
Point
of
guard.
the transaction. They control the
Absolutely.
ball. They know when to pass it. They know when to take a shot.
Exactly.
They know where to ask for it. They know where to bench you, right?
Exactly.
So they're basically they're controlling the game, the
Mm-hmm.
experience, right? So you don't have to know an attorney or an inspector or a lender, right? They can cultivate that team.
Right. We have a team. We certainly have a team, and obviously you're a part of our team. So
And that's so
Yeah.
important because if we work together before, if you know the inspector, if you know the attorney, and we have a
Yeah.
working relationship,
hmm
Yeah. Your system is smooth.
yeah.
right.
Because there's sometimes because if you don't know like the communication, like what's it, how does this person communicate? Do they prefer phone calls versus emails? Right? What's going on in their life? Right? Are they working from home right now because their wife, or they just had a baby, and the fact of the matter is that when we know each other, right, we know how to work around it. And I just
Yeah.
mentioned that because I know I was working with an attorney that just had a baby, was working from home, and I'm like, okay, right. I, I'm 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 gonna reach out to her when I need to reach out, and then for her it was better to just text instead of call. She's gonna have a
Exactly.
crying baby in the back.
Right.
But she's still working.
Yeah.
But she's still rocking, right? So it's like okay, but that's how you know, right? We work with each other so we can
Right.
get to the finish line. If we don't have the understanding, the listen, we're like pilots. Like we want to land that plane
Yeah.
together,
Right.
right? And if we're all on the same page, it can be a nice, smooth landing. If everybody has different, we don't have any working relationships or whatever, it could be a rocky.
Yeah.
Absolutely, absolutely. Because the buyer will say, "Well, I have my own attorney, or I have,
Yeah.
but I have the home inspector.
Yeah.
You got the lender, and
Yeah.
you piece everybody
Yeah.
in different places.
Yeah.
But if we're a team
Yeah,
and we're
we're a
working
team,
together as a team, we're
Yeah.
effective and then
Yeah.
we're efficient,
Yeah. Yeah.
right, to get it done.
To get it
I
done.
like that.
Yeah, it's we're here playing for you, right?
Yeah.
In the end, and here this is important, right? Because this costs to purchasing a property. The biggest costs typically are closing. You have the down payment, but the down payment is just you're putting it towards your equity. It's
Yeah.
like you're moving money from your bank to equity of a house. So
Yeah.
you're not losing.
Absolutely, a down payment is your equity.
The cost is typically, attorney fees, inspector fees, appraisal fees, there's bank fees, there's inspections and homeowners insurance and
Escrow.
escrows, right? Um, how about realtors? How do realtors get paid? Let's
Closing.
let's how do realtors how does a buyer need to also have cash to pay you as a
Yes.
realtor?
So now that
It's-
the
yeah,
law,
things
law
have
has
changed.
passed in 2024,
24.
Yeah.
the
August
sellers, the sellers has always had, this option, I believe, but this has been more like heavily enforced now that the sellers have the option to pay out a buyer's agency commission. So now there has to be a buyer's agency agreement
Mhm.
with the realtors and buyers in order for buyers to see properties in private. If you don't have a buyer agency agreement, you can only see a property in private if you have signed an agreement. And if you want to see it without an agent, you need to go to an open house.
Mm.
So now, right, buyers need to consider. I'm not saying like all sellers, some sellers are still doing it the regular way. They'll still pay out a buyer's agent commission. But some sellers are privy to this and they know that I don't have to, and
Right,
they
they have
won't.
an option. Like prior to the NAR settlement
Mhm.
situation, it was just sellers paid the
It's
commission.
like an unspoken rule.
Yeah.
It was an unspoken rule that
Yeah.
sellers would pay the buyer's broker
Yeah.
commission,
Mhm.
right? It was unsaid, and it was on the listing agreement, and it was spelled out that the seller will pay said buyer's agent said amount.
Mhm.
Now they have an option,
Mhm.
Yeah,
right? They have an option.
So and it depends on the market. It depends sellers versus buyers.
Mhm.
And here's the thing, right? The majority of every transaction that our branch is closing, because it's not just me, right? There's other loan originators as well, in my branch. The seller is still paying for most, if not all, of the buyer's agent commission.
Right.
Mhm.
And
So-
I've seen you say before, um like when because like for a buyer you're paying your down payment, all your closing costs, things of that nature. You may not necessarily have all the money to pay a 2.5% of $600,000 on
Right.
top of that.
Commission to their,
So
yeah.
I know me and you have had a discussion in a deal before when the commissions was a thing that hey maybe we could just loop it into the loan, and you it's basically like you financing the buyer's agent commission with your mortgage,
Yeah.
so that way you can like that you don't run into any hiccups, you can still buy the house you want and you're not necessarily coming out of pocket
Yeah.
that much money right then and there. You're just you're looping it into the
Yeah,
mortgage and purchase
it's
price.
part of working with professionals to structure your offer in the right
Yeah,
way to win the deal.
right.
And for those of you guys that are here, right? So typically, right, as a buyer, right, you put in a down payment, and you have these closing costs, and there's other things like we can do sellers concessions and what. Again, it depends on the market. Is a seller going to accept it if there's 50 offers on that property or not? And we talk about all these things, but when Cynthia's gonna go list the property, right, and is gonna market the property for the seller, right, a lot of times the conversation, and correct me if I'm wrong, Cynthia, you're saying, listen, um, if we wind up paying right a commission for a buyers, we're gonna get a lot more eyes on the
Absolutely.
property, which
Absolutely.
is gonna create demand.
Right.
So even if you wind up paying the commission for the buyer's agent, you're gonna make it up because we're going to create demand for your
Demand.
property
Right.
where you're going to wind up getting more money, and it's a wash anywhere you want to get it more.
Right.
Because now in this market where it's so tight, money's so tight,
Yeah.
Exactly.
if you don't do that, then you're going to eliminate a ton of
You're gonna eliminate,
agents
yeah.
and buyers
Yes.
You're taking out a
that
whole sector
that
of
won't
buyers.
even be able to look at your property. So now that house is going to be sitting there longer, and then guess what? You're going to want to accepting less for the house anyway.
Exactly.
So it's about creating that demand. So most sellers still understand that. Most listing agents still
But you
have
have to have that conversation with
have to
them.
have them.
Yeah.
Yeah, because I do
Yeah.
definitely with my
Yeah.
sellers. I have that
Yeah.
conversation with
Yeah.
them
And
about commission.
about commissions. And then sometimes, let's say for example, if they're saying, you know what, if your commission is 2.5% on the property and the sellers wanted to pay 2% commission, right? You have right with the buyer to make the conversation. Do we have 0.5%? Can you put down right? Can you, instead of putting down 10% if you wanted to, or 5%, can you do 3.5% so you can have enough money for the other 0.5%? Or can we roll it into the offer? Can we offer a little bit more?
Exactly.
So that way we can say, hey, listen, Mr. Seller, you were only paying 2.5%, but we're going to offer you, we're going to put this offer in, so then that way you can pay the buyer's commission 2.5% instead of 2%.
Instead of 2%.
It's all in how we
Yeah.
structure
Right.
it.
Absolutely. I've seen
Right.
offers come in exactly like that.
And
Yeah.
that's
Yeah.
to your point, if we go all the way back to that one question, how's the market? This is all the stuff that just coincides. This is the market. You may have to pay a buyer's agency commission.
Mhm.
If you can't afford it, this is what you may have to. This is just a part of how you got to maneuver
Right.
in it. Yeah, I mean, like buying a house, you can. I think anybody can definitely do it. It's a doable thing, and you can go ahead and do it if you have those bases, like you said, that trifecta, that income of credit and assets. As long as that's you have those things, right, and you're ready, you want to get out there, then you can do it. It's the only we just gotta strategize a way of how we're gonna do it.
Right. And get it done.
That's literally that is literally the only thing. It's like, all right, I want to do this. All right, let's analyze this based on this.
Yeah.
How do we get there? You know what I mean? And if it's not through the front door, then maybe we have to go in through the back.
Strategy, right? Strategy.
Uh-huh.
Who you work with matters. What sellers want is certainty, right? The
Right,
highest
yes.
offer necessarily isn't the
Yes.
best offer. It's
No.
how you structure it. They want a
Yes.
smooth deal,
Yeah.
right? If I'm selling my house and somebody's offering me $5,000 more than the next person, but that $5,000 person is a little shaky, maybe their terms, their contract isn't written
Right.
out as good as the other person, right? Maybe that the person's lender reaches out to me and we says, hey, listen, we've already done this pre-approval, we've done it, we
Yeah.
checked this, we got verifications of employment. I want to make sure that I sell this house for my seller. I want
Exactly.
certainty, right?
Exactly.
Even cash, people, we talk about cash is king. Well, you know what? Somebody might say, I'm going to offer you this cash and it's $20,000 less than an FHA buyer, and it all depends situation. If your house is in good shape, and if a cash buyer says I'm going to buy this whatever, and then you ask him for proof of funds to make sure that you're going to accept it, and then it's 3 days and they don't accept the proof of funds, something's fishy. But then yet the FHA buyer is already giving you the DU approval, this person, this and this and that. We can close in 30 days. Listen, am I gonna say, you know what? I'm gonna miss out 20 grand.
And can you just
20 grand
can
for
you-
cash buyer? I'm
you-
gonna go with the FHA.
Yeah, can you elaborate on that DU approval? Because that I've heard of DU approval from, and you correct me if I'm wrong, but it's basically like they have gone through the underwriting process like completely already, right?
Well, the DU and LP, what it is, this is regulated by Dodd-Frank, and it's basically it's guidelines that are accepted by Freddie Mac and Fannie Mae. And listen, just like anything else, garbage in, garbage out. You can finagle an application, and it can pass or not pass. But if you do the interview, the application, if you verify the information correctly, what we do is we run it automatically. So think of it like AI, like artificial intelligence. We run it, and it reads the person's income, right?
Mm-hmm.
We have to calculate it correctly as loan officers. The person's income, looks like the credit profile, the amount of money that we have, and then it says it's passed. So it can be instantaneous once we have all the documents. Listen, there's still things that can fall through, even if that DU approved, right? If we don't know some guidelines, right? But that's like the first step. So listen, in Florida, for example, most of the people that I work with in Florida, they don't accept the pre-approval without a DU and LP attached to it,
Right.
right? And that's the bare minimum. Now we can go a step further. We can do what's called, where we can actually have it fully underwritten, which is actually an underwriter reviewing the file, checking verifications of employment, checking income, and now that's the next step on top of the DU approval, because every underwriter, it has to pass. So what happens is an underwriter is going to double check the income calculation. I'm trying to close a deal next week where, I pre-approved this family and they had a good amount of overtime and bonuses for the 2 years, so you average it. But now what's happening is this year they haven't gotten that. So the guideline is that if they haven't gotten that, we got to go by the lesser amount. So now their overtime and bonus has been reduced significantly. Well, I had to fight that because I'll say, well, listen, this person doesn't get overtime until the spring and summer, right? And now you got to get payroll ledgers or whatever, right? So what I'm saying is that sometimes an underwriter like interprets the guidelines,
Right.
and our job is to do the things, to really kind of fight for the income and whatnot.
That's
So-
manual.
Yeah, so it's a manual person that's actually looking at it, right? But because I could put somebody makes $100,000 on the DU and $120,000 and it'll pass. So we have to make sure that the income is accurate. If somebody has, I had a situation where somebody said, yeah, I'm full time, and I'm like, well, how come your pay stubs, right, are not showing full time? They're inconsistent. Oh, I take
Right.
time off, whatever. And then I'm like, okay, well, as long as we get a verification of employment showing up to full time, and we prove that, and we get a ledger, we're fine. Well, guess what? The verification of employment came back, and it says that they're not full time. So now their income is not the full time income; is the part time income. We have to average it out.
It's like
So we have to look at all these things,
You
right?
have
So when an
to.
underwriter does it, they look at these verifications. A lot of times when we can order the verification of employment even during the pre-approval. If there's some issues with income, we're ordering the verification prior to it underwrite. You have on the contract. So whenever there's these issues, you want to make sure that we have good pre-approval. 99% of the time where a loan doesn't close is because something was missed by the loan officer. And I'm not saying that the loan officer, there's a lot of different guidelines and things change all the time, right? Right now they changed where I had a gentleman where, he's not a non-permanent resident. Last year, he could have bought with an FHA loan. Well, with this, you can't get an FHA loan if you're a non-permanent resident alien. You can only get a conventional loan. But then the restrictions are tighter for a conventional loan because it's not insured, right? But guess what? He couldn't get approved for a $200,000 loan with 5% down. The only time he can get it, the only way he can get pre-approved for a $200,000 loan is if he puts 10% down. But that's because we have to run it through, and that's what it accepted. So if you're not doing those things, just imagine if you running around showing somebody a house, right? And then in the end, right, the lender comes and says, "Oh, this person has to put 10% down because they didn't run DU, and now they don't have the 10% down. Right? Now the deal's dead, right?" So you have to do these things up front, so that way we can kind of land
Yes.
the plane.
Yeah. I
Right?
agree with
Whew,
that.
And
I
I
agree
tell
with that
people,
100%.
and I tell people this, right? And I tell people this all the time. Like when I say to people, listen, like a captain, like a pilot is gonna say, listen, this is gonna be a bumpy ride. They tell you in the fans, we're gonna get up there. Once we get to 10,000 feet, it's gonna be like whatever.
yeah.
So sometimes I tell people, listen, this is not an easy file. It's a bumpy ride, and there's some things when you're a 580 credit score, things pop up and collections and this and that, right? We have to look at these things.
Mhm.
I believe we can do it. We're gonna get you to the finish line, right? But this is something that we're gonna probably require a lot more work on our
Right.
end. Whether but if you have an 800 credit score with 20% down, right, is like it's going to be a smooth ride because the person has prepared themselves. They put them in
Right.
a
Yeah.
position. And then just to end, right, and I want to leave you guys with some last words. Um, for the audience here,
Mhm.
um, don't wait, don't wait because even you may not be ready now, but our job is to educate you,
Right.
right? We're not here to force you to buy a house.
Right.
Our job is to educate you so you can decide when's the right time. But many people are more ready than they think they are
Right.
just by having the conversation, or at least they have a plan to get there.
Right.
People reach out to me a year or 2 years for like that I spoke to a year or 2 years ago. Hey, Eric, I remember you told me this. I'm ready now, right? I've been doing what you told me. I'm ready now.
Right.
So it's about having that conversation. So do not be afraid, right, of taking that first step.
Right.
And the first step is this: is educating, right?
Yes.
The first step is getting educated because the more you know, the less fear you have,
Right.
Exactly.
right? So cool. So I mean, I had a great time with you guys today. What do you
Yeah.
want to leave the audience with today?
Um. phew, what you want?
Okay.
he
Well,
said,
for
"Ladies first."
sure. Well,
Good.
okay. Yeah, so well, for sure we definitely want to invite or put it out there that we're having our grand opening
Oh yes.
for CWJ Real Estate Group. It's going to be on May 14th. At I guess you can RSVP at 862 and it's from 6 to 8. It's just come on and meet and greet and let us, introduce you to our office and our location and just share our services with you. So we're just excited. We're excited.
Yeah. So I mean, to kind of elaborate and generalize that, because I know TikTok is like global. Might be people tapping in from all over.
Oh,
Um,
okay.
but our brokerage is based in New Jersey, so if you want to, learn more about it or get more information about the grand opening, where it's happening at, just follow us on Instagram at CWJRE Group,
Yeah.
and you'll be able to see the videos and invitations and things of that nature. But Eric, I definitely had a good time. This was great. If
Oh,
I wanted to
yeah.
leave like a last just a couple of remarks is that, and from a real estate perspective, is just kind of what I was saying earlier. Real estate transactions and just real estate in general may not be as linear as you think, but that doesn't mean that it isn't attainable. There's so many ways you can buy and get into it. Because, like Eric was saying, you get if you don't want to do incomes and provide your tax returns to see what your net is, like, and things of that nature. Like if you don't have like that type of income, but you have a large savings, you could do it non-QM, non-qualified mortgages. Like there's just so many different ways to get to it. I just want to just say that being a homeowner it is obtainable, and you can definitely do it. And there's not one way to get it done. So
Right.
um, that's what I want to leave off with.
Continue to follow Cynthia and Darren. I'll make sure that when I post these clips, I'll tag them. Right, you can check them out. They put a lot of great information out there. And listen, we're in New Jersey, but we can help you all over. Like they have a network all over the country.
Yeah.
So like even if you're somewhere else and you feel comfortable with what you heard today from Cynthia and Darren, and you're looking for a realtor, right? They can connect you to someone, right? Because again, going back to that warm referral,
Yeah.
instead of just going and cold turkey reaching out to someone, they can actually connect you to someone. Same thing with me, right? So guys, listen, I appreciate you guys coming on here. It's I hope if we can help one person on each live, right? And sometimes we may not even know that we help somebody, right? But I just closed someone last week in TikTok that found me on here. So this is a very powerful tool. I know the lives everywhere else is so important because you want to work with people that are real, that are going to be there fighting for you, and the Jordan family is was one that's going to be doing that. So, guys, thanks again, and until next time.
All right, take care.
All right, guys, that was good.